Hey folks, welcome back to Everything Money. It's Paul, Seth, and Mo bringing you expert advice on financial data of companies. Today we're looking at Vale. Now, we all say Vale, the ticker symbol VALE. These are iron ore company in Brazil. But alas, Paul, I grilled you guys at lunch last week because I listened to a conference call of this Brazilian company and they pronounced it Vale, which is Portuguese for valley. So I'm going to be the idiot calling it Vale.
Which is Portuguese for the good land.
The good land. Miliwake. We're going to look at the financials of Vale. We're going to look at that compared to Rio Tinto, another Brazilian iron ore company. Why is this and why have you clicked on this video? So iron ore is huge nowadays. Paul, this Evergrande crisis in China imports 75% of the iron ore in the world.
75%?
75%. Nickel is used. Vale mines the nickel. This is used for all the EV batteries, all the EV cars. And we know how far batteries have come in cell phone, everything. The batteries today are amazing. It has hydroelectric plants. It has its own railroads and shipping. Rio Tinto is a competitor, and they're issuing a special dividend that might be distorting their true dividend price. We have to be aware of that moving forward. In this video, we'll look at the financials of Vale. We will look at the trading of Vale with Mo as he trades with our Everything Money community. Paul, take it away because you are frothing at the mouth and I can feel the heat from your undercarriage because iron prices are going bonkers, baby cakes.
So first off, follow us on Instagram. We really appreciate it. So I'm going to do the 8 pillars first. The thing about commodity businesses, guys, is their revenue and profit are driven by the underlying commodity price. So example, if you have an oil company and the oil prices are sky high, are they going to make more money or less money?
Of course.
That's the same idea here for iron ore. We're going to, after I do the analysis, we will look at iron ore prices. So make sure you stay to the end to see the analysis of the iron ore prices after I've done everything. So
Vale's market cap.
Market cap is 70 billion. Look at this 5-year PE.
Ooh, we begin.
Only 11.3. We want it to be less than 22.5. Check mark there.
Mm-hmm.
Check. 5-year return on invested capital, 13.3%. Check mark there. We want it over 9%.
9. Yep, sorry to interrupt. Go ahead.
No, that's okay. Income statement, guys. We want to see revenue growth in the last 5 years. 31.7 to 54.5. Yep. Check mark there. Scroll down to net income. 3.61 to 16.8 billion dollars. Seth, look at this. 3.6, 4.7, 3.4, 1.3, 16.8.
Wow.
Okay, so that's why the 1-year PE is like 4, and the 5-year PE is so low. It's been skewed by this last year, and you know me. I'm always apprehensive about 1-year drops or increases in revenue or profit. I always say, wait a second, we're here for the long run, so we had to look at longer term ranges, right?
Paul, I own that other company, DGF. We make a graphite spray, and I got an email from my manufacturer. Iron ore makes steel. So the steel used to make our spray cans, he's projecting a 250% increase in price for our cans.
Wait till the end of the video.
Keep going.
Then you can go back to him and be like, listen, mofo. All right, guys, shares outstanding.
We want this going down, baby cake.
And it is a little bit, 5.2 billion down to 5.1 billion. So check mark there. Now, guys.
What about that software you're using, Paul? It's kind of sexy.
So this software was created because our subscribers said, hey, how do we get these financials? We want to look at it ourselves. So we created it. What you get with our software, the mobile app, this entire website on mobile phone, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content. But one of the biggest things, a Discord community with over 6,300 people who have access to it. You can talk to them about any investment ideas you have. They're all doing research. They're all learning, all for 90 cents per day, guys. 90 cents per day, less than a cup of coffee per day. If you are serious about your financial future, this will literally make you hundreds of thousands of dollars in your lifetime by learning our process and using the financials. You get all of this. Our competitors are $200, $235 a month, and they don't come even close to our content and what we're giving you. This is a no-brainer. Go to everythingmoney.com or Patreon at the links below and sign up.
You can have this data in the palm of your hand and use it every single day, which you can also look up for pillar number 6, which is the total long-term liabilities divided by the 5-year free cash flow for Vale.
So the average 5-year free cash flow is 10 billion. Mm-hmm. So what I'm doing here is I'm multiplying by 5. That's giving me a value of $51 billion. 51. So I want their total long-term liabilities to be under 51 billion. Okay, that means that if they just replicate the last 5 years, they could pay off all their debts within the long-term liabilities within 5 years. So I go to the balance sheet, scroll to the bottom, total long-term liabilities, 40 billion. So that's a check, because it's less than 51. Now, cash flow. The most important metric for me And the reason being is cash flow is harder to manipulate than earnings. Earnings are affected by SEC rules, accounting rules, etc. Cash flow is a lot different. You can manipulate cash flow, but it's a lot harder. We added this line to the cash flow statement because free cash flow is calculated as cash from operations less your capital expenditures, which you can use to pay dividends, buy back shares, pay down debt, and make acquisitions. Now, look at their free cash flow, a lot more consistent than their earnings. 6.3 billion to 21.5, 21.6, that's a check mark.
Check, please.
And what we're gonna do is, their last 5-year average is 10.2. We multiply it by 20, that's a $204 billion market cap.
Are you serious?
Yeah, it's big.
And
their market cap is what, 70?
The actual market cap is 70, yes, Paul.
So this is a check mark.
Holy cow.
Now remember, once Mo is done with his charts, I'm going to show you the stock analyzer tool and then look at iron ore prices to show you what I really mean about this company.
I'm freaking out, folks.
Oh, but wait a second, really quick.
Oh, go ahead, Paul.
This is the 8 pillars tab.
Ooh.
It's all 8 check marks.
Check, please.
Yep. We had all 8 check marks here.
I'm freaking out, folks, because most of our videos we're telling you not to buy these overpriced stocks, and I love when we get into the wheelhouse. But where people trading Vale in the bid-ask nation. Look at that.
You notice how choppy this is? Mm-hmm. That's what happens when it comes to commodities. That's why I don't like doing them long term, because you get these ups and downs random. I mean, this is a week period right here. These 5 days, you were big down, little nothing, then big up. So to me, that's not something I want to do from a long-term perspective. Rather, I would come over here to a daily chart and somehow work it with this. And all I would do is just follow these daily stochastics and try to generate swing trades. But you can even see it's a little bit challenging here too. Mm-hmm. The best option with this, especially because you do get a lot of volatility and a ton of volume on these things, is go and day trade them on a 15-minute chart. You can probably put this in a portfolio of 5 stocks and trade this stock every single day, long and short, and generate 1% on it probably per day.
Sure.
Because this thing moves quite a bit, even when it's not in the news. Like, this is very news-driven right now. Everybody's talking about it. Even when it's not in the news, I think this thing is going to move quite a bit. So,
one of our ambassadors, Cash, works in the steel industry. Paul, he said for the first time ever in September, for the first time in a long time, steel prices are coming down, which I think you're going to be alluding to moving forward.
Yes.
Give us those assumptions with the stock analyzer tool. You get this, folks, when you get our software and join our community. This helps you evaluate the stock price in comparison to the financials. Go ahead, Paul.
So, guys, iron ore prices in the last year have been very, very high, and you'll see that in our chart next. So I'm actually going for, to be conservative, revenue going down for the next 7 years, staying the same, and slight growth. Here are my assumptions. Again, PE and price of free cash flow, I went very low. Why? A lot of volatility based on the commodity price. So I want to pay a low multiple in order to give myself like a little margin of safety. And then I put my 15, 12.5, and 10%. Analyze button. The stock's currently at 1380. All right, it's actually not far off from the middle range. Mm-hmm. 10 to 1350, not bad. So this company might be one that if you believe in the long-term of iron ore as the gruel develops, after they demand more iron ore, maybe this is a company you want to be involved with long term. But I believe this is a long-term play if you choose to do it. Don't look at this and say, oh, great, iron ore prices are up this year, therefore you have to look at it long term.
Someone might say with this Evergrande crisis in China where they're not going to need this iron because they're defaulting on this enormous loan.
Temporarily, yeah. Short term, yeah, probably. But remember, guys, when the financial crisis happened in 08, 09, did we get over it? Yeah.
I see.
When the housing boom crashed in 06, 07, did we get over it? Yeah.
I guess the point is saying is if you're following this and if we're in the sweet spot for buying and this, you better be ready for this to go down, which is what us as value investors like to see, Paul. We buy Alibaba, it goes down. We need to be happy about it. The same thing might be true for Vale.
Yes.
Show us those prices behind you, Bubby Cakes.
Okay, so look at iron ore prices. Oh my God. This is the last year. A little into July, it was 220. It's now 110. That's exactly half. Right? Now let's look at Vale's stock price.
Oh, I see.
Let's go to their stock price. The last year, in July, $22, $23 a share. Now 13. Not quite half, but where the stock goes, where the iron ore prices go, the stock goes. Right? Does this chart, Seth? Look at this chart. Mm-hmm. And look at iron ore prices chart of the last year.
I would assume its competitor Rio Tinto would look very similar.
Let's look. Rio Tinto.
Huzzah.
Oh my God, is that like...
Oh, there it is, Paul.
Guys, it's very similar. Mm-hmm. So it's not a matter of... So commodity doesn't mean you can't make money in the commodities business. But I would be buying commodity companies at very low prices to historical values, to historical levels. So I go here to the 10-year. So this is going back at iron ore prices on this website. And the average is probably around here. So it's a little bit below the average of the last 10 years. But like right here, 2016, it was at $50 per, or whatever the 50 metric here. Let's go back to Vale.
I was going to say, Paul, you're going to like the 8 pillars of Rio Tinto, I think, even better than Vale.
And by the way, look at the stock price. It hit a low in 2016.
$2.
And guess where iron ore was? A low in 2016. Do you see my point here? So when you're paying attention to these commodities, I think you look at it and say, if you want to trade them, it's going to be a longer term trade where you look and go, hey, wait, this commodity price keeps falling and falling and falling. Is this going to be permanent? Probably not. Let me buy it at low prices and watch the companies go up. It's a way to make money on the commodity without buying the commodity. Okay, so let's go back to Rio Tinto.
Yeah, their stats
and we're
are pretty boss.
We're gonna go right to the 8 pillars instead of doing all the analysis. Oh wow, all checks there too.
Yeah, so Vale's.
I actually like Vale a little bit more. I think. Let me see. Oh, got to go to annual here.
It's close.
So on foreign companies, guys, you probably have to go to annual and not 4 quarters on your drop down. Yeah, I mean, look at the 60 billion it did in 2011. Why? Because iron ore prices were through the roof. It's guys, this isn't like random. Iron ore prices are going to drive revenue and profit, which are going to drive the company's stock price. That's it. So I think for these kind of companies, it's very important to make sure you're aware of. Yeah, make sure you're aware of where these iron ore prices are, where the commodity price is fundamentally versus the long term.
That's our take on Vale, a little bit of Rio Tinto. Stay tuned to those iron ore prices. They are bonkers. And if China doesn't need that iron, we shall see where this price will go. Final thumbs up. Join our community. We'll see you next video. Thanks for watching, guys.